Hello everyone. From chapter 1 to chapter 18, we have discussed about financial accounting. In financial accounting, do you remember we have to record the accounting transactions, and then after that we process to the ledgers, we prepare trial balance, adjusting entries, and then we prepare financial statements. And these financial statements mostly are used by the external users. So today we're going to look at a different area in accounting. It's called managerial accounting. So what is the difference between financial accounting and managerial accounting? Today we're going to look at that. All right. So first of all, let's look at what is managerial accounting. Now, managerial accounting is providing economic and financial information for managers and other internal users. So, mostly the information in managerial accounting is provided to the managers and internal users. This is the main difference between financial accounting, because financial accounting normally is providing information to the external users. And there are some similarities and differences between managerial and financial accounting. Each field will deal with the economic transactions of business. And both fields require that the transactions should be quantified and communicated to interested users. So let's look at a comparison between financial accounting and managerial accounting. Now you can open your book and you can see there's a table that shows the similarity and differences between financial accounting and managerial accounting. So let's look at the first perspective about the primary users of the reports. So for financial accounting, we provide information to external users. And these external users include shareholders, creditors, and regulators, the government. But for managerial accounting, we mostly provided information to the internal user, which is the managers and also the officers, the employees. Okay, now what about the type and frequency of the reports? So for financial accounting, the accountants, they have to prepare the financial statements, the balance sheet, income statement, owner equity statement, the cash flow statement. They have to prepare all of these statements every 3 months, we call it quarterly, or every year, annually. But for managerial accounting, we will prepare the internal reports. It can be a contribution income statement, it can be a flexible budget, and normally the report is prepared as frequently as needed. You know, it's not every 3 months, it's not every year. So whenever the managers need the information, the managerial accountants have to prepare this report. Now let's look at the purpose of the report. Financial accounting has general purpose, while managerial accounting has specific purpose for specific decision. Okay, for example, if the manager needs information whether the manager should purchase a new equipment or replace the old equipment, they will need some information for this specific decision. For example, like the price of the new equipment, how much does it cost for us to replace the old equipment or repair the old equipment. So in another word, it will give us some information for this specific decision. Now let's look at the content of the reports. Financial accounting is related to the business as a whole. It is very condensed, or we call it aggregated. It's limited to double entry accounting and cost data, and the accountant have to follow accounting principle, GAAP. You remember that? Generally accepted accounting principles. But for managerial accounting, it will be prepare the report for the departments, or we say the sub-units of the business. And it's very detailed, it's very specific, and it extends beyond the double entry accounting to any relevant data. And we don't have to follow any principle like GAAP. There's some standards. It is relevant to the decisions. And finally, for the verification process, financial accounting is audited by accountants, by the auditors, but managerial accounting, the information do not need to be audited by the auditors. So these are the differences between financial accounting and managerial accounting. So as you know that the three basic functions of manager, we have planning, directing, and controlling. So every manager, they have to involve in planning. In this step of planning, they will set the objective or the goals of the business. So the objective can be to maximize the short-term profit or increase the market share of the business. So we want to increase the profit. We want to increase the market shares of the business. And also, the company have to find out what do they need to do to commit to environmental protection, social program, and add value to the business. For example, do we have any program that we can treat the waste, or do we have any system to manage the water waste? Okay, so and then next we will have the next activity, which is directing. So after we set the goals and objectives, we will need to coordinate the activities and human resources in the business and make sure that they will work toward the goals or objectives that we set. And then we can provide incentives or rewards, motivate the employees to work harder, train them, and make sure that the operation will run smoothly. All right? And finally, the last step is to control. So we need to keep activity on track. We need to control between the plan and the actual result, whether the actual result will go according to the plan or not. And then we also find out if there are any changes that needed to get back on the track. And so we may use an informal or formal system of evaluation. Now let's look at the organizational chart of a company. So we have the shareholders, those people who purchase the stock of the company, and these shareholders, they will elect a board of director, and this board of director will hire a CEO or a president who will manage all the activity of the company. And under this president, we have the general counsel or secretary, vice president in marketing, vice president in finance, vice president in operation, and vice president in human resources. Under the vice president in finance, we will have the treasurer and the controller. All right. Now let's continue to the managerial cost concepts. So managerial accounting provides the information to the managers, and there are many questions that the managers have that related to the managerial costs. For example, what costs are involved when we producing a product or providing the services? How much does it cost for us to produce 1 unit of product? And if we decrease the number of units that we produce, will it make our cost increase? What happens will automation have on total cost? Or which way that we can do is the best to control the cost? So managerial accounting will help us to answer these questions.